This is the Scrap Metal, Commodities, Recycling, and Economic Report by BENLEE and Raleigh Goldsboro Recycling, August 28, 2017. Last week, commodity prices rose, and there were many positive economic reports, mixed with some economic red flags. U.S. steel production fell slightly, remaining near a 2.5-year high, but imports were up 22.1% this year, with an estimated 28% market share, as U.S. steel producers continue to request increased tariffs. Oil fell $1 to $47.87, with low prices hurting U.S. drilling. It is not clear what effect Hurricane Harvey will have on the overall oil industry. The oil rig count fell 9 to 759, so there's stabilization and some contraction after years of growth. Iron ore rose $1 a metric ton to $76.50, another multi-month high, putting upward pressure on finished steel and scrap prices. Scrap ferrous prices stayed higher, with upward pressure for September, evidenced by some southeast steel mills are unusually open Saturdays to secure added deliveries. Higher prices have yet to bring huge increases in scrap flows. Hot dip galvanized steel rose $10 at $9.50, up more than 50% in the past 18 months on continued good demand. Stainless steel 4 scrap prices remain steady at 29.5 cents on this graph, but prices are actually up about 3 cents, which should show next week. Copper rose a big 10 cents to 304 on September COMEX. Note we are now moving to December COMEX, which closed at 306, but with the highest spreads in many years. Copper is up 3 cents this morning to 309. The 5-year copper chart shows copper was last over $3 in 2014, 3 years ago. Copper inventories fell slightly, but remain at a much higher level than 12 months ago, which is tempering the price increases. Aluminum ended flat at about 93.8 cents on solid demand, but was actually 96 cents midweek. The 5-year chart shows copper were last at 96 cents in early 2013, 4.5 years ago. Aluminum inventories rose a bit, but still are about 10-year lows on solid demand. Increased pricing has brought on new production, which should start tempering these prices. There are a few negative signs in the economy. Sales of previously owned homes fell 1.3% in July to 5.44 million units annualized. This is the lowest reading in 11 months, but is still a good number. Sale of new single-family homes also fell, and now to an annualized rate of 571,000, the lowest rate of the year. As a positive though, this is still double the 2011 low, but it is at the levels from the 1960s. There are 67% more people living in the U.S. today than 1965, but we are seeing the same number of homes being built. As a major positive, the economy's manufacturing capacity utilization is near a 12-month high at 76.7%. We are still off the average 40-year high of 80%, which will keep inflation in check. On a major positive note, for the first time in a decade, the world's major economies are growing in sync, due to the low interest rates and stimulus from central banks. Of 45 countries tracked by the Organization of Economic Development and Cooperation, 33 are accelerating and all are growing. 33 is the most countries in acceleration since 2010. This will keep upward pressure on commodity prices. The Dow Jones rose to 21,814, near an all-time high, but is a negative $30 billion has been pulled from stocks in the past 10 weeks, the longest stretch of negative flow since 2004. A sign that the 8-year run is hitting a high. Lastly, our thoughts and prayers go to all the people of Texas. May they all be as safe as possible. As always, feel free to call or email me with any questions, and we hope all have a safe and prosperous week.